Ashok Wadhwa, Group CEO at Ambit, joining in the show right now. Ashok, hi, good morning. Good to have you on the show. And after a long haul and ET now, we were just looking at how the markets have panned out, Ashok. We're already at early March levels. Seems like a bad dream, which got over sooner than later, I would say. And, especially the kind of retail participation that we've seen actually, bump up, call it a phenomena of work from home, hobby trading, what have you. May to June retail's volumes are already at a decade high of over 70%. Would it be safe to say that the bull market is pretty much intact, or do you think it's too early to call that?
I would be cautious on that, honestly. I'm not sure we can, at this stage, predict that the market is in the bull range and that it shall continue to move in tandem with the developments that we have seen over the last month or so. Very clearly, the downward movement, the swing downwards was a sudden and a serious and a significant downward movement. The pandemic obviously caused serious concerns in everybody's mind. But, as we see the lockdown ease out, as we see large parts of the world economy come back, as we see manufacturing in India go back to its normal course, as we see numbers being declared, and we don't see the impact of this pandemic as significant in several pockets as we had originally anticipated, I think the positive emotion and the sentiment is coming back. That's obviously aided by the fact that the world and science and Indian companies like Serum are making significant progress towards finding a solution to this pandemic. And I think all that is adding up. So to begin with, the downward trend, the spiral downward trend was not justified. And I would argue that in some ways, the spiral trend upwards is making up for that loss. It's not justified by pure numbers and the sentiment around us, which is why I would remain very cautious. What concerns me at this stage, of course, is the fact that the retail participation has really, as you rightly pointed out, is that decade high numbers. I always worry when the retail participation moves up so dramatically and so fast, whether it is having two computers at home, one being used for work and one being used for trading. Most offices ban trading, as you know. Whether it is just more time at hand, whether it is just the positive sentiment. I guess it's a sum total of all these things that's contributing to serious retail participation at this point of time. Market volumes from 41, 42,000 moving to 60,000, largely contributed by retail, is a matter of both concern as well as some element of happiness. Retail has not been a significant participant in the Indian market. We've always wanted retail to participate more. But the sudden and sharp jump would cause concern because I worry about what would happen if there was a trend downwards once again.
Sure. The other interesting thing that's happened, Ashok, in the last 3 months is that you're seeing a lot of promoters going for large, chunky deals. I mean, Jio, of course, is one of a kind with those 13 checks coming in, but a series of fundraising by banks as well. How is it that you would read into it? Is this just contingency planning? Are they making use of this time to fundraise? And that, would you say, is a prudent step, or is it sniffing of just, bit of a caution, bit of a haze on they don't know how things are going to pan out, so raise money while you can? Or is it just a step to improve their balance sheets?
I would say there are three different factors probably applying to different segments of corporates and market that are contributing to this sudden fundraise. I would put the first one in what I would call opportunistic. I would call the second one in terms of being cautious as to what the business would do. And I would say the third one in preparation of being some that will navigate these troubled times and will have significant inorganic opportunities. The first one, which is perhaps the opportunistic one, is being led by the fact that this pandemic has opened completely new opportunities, right? I mean, in many ways, the positive sentiment on the back of which the market is moving today the positive sentiment on the back of which the retail investors have now come back in such a large number to the market should be attributable to the outstanding, I would say, perhaps once in a century performance of Jio in terms of just capital raising. Clearly, the opportunity came because the pandemic made digital, automation, telecom, telephony, and everything related to that as a significant new opportunity. Not that the opportunity was not there, but the importance of this opportunity and the ability for this opportunity to scale up was brought to fore, with great focus by this unfortunate pandemic. And therefore, I would say Jio leading that way, and therefore many other companies in that whole segment of telecom, as I said, telephony, digitization, automation, have taken advantage of this wonderful opportunity that this unfortunate pandemic has led to. The second piece I would say is caution for the future. I would like to believe that the financials are largely raising money, despite the fact that most financials are today raising money at prices which are significantly below the 52-week high. And I would argue that capital raising, which is very prudent, is being led by the fact that post-moratorium, don't forget that most financial companies, whether they are shadow banks like NBFCs or indeed banks itself, have a large exposure to the medium and small enterprise segment. And once the moratorium is removed, we don't know how the borrower will behave. We don't know what happens to the credit culture in India. And most people would tell you today that there is concern that the number of delinquencies in that segment would significantly go up. And I would argue that the financials are doing absolutely the right and prudent thing by preparing themselves and raising more capital such that they have the ability to weather that minor storm should that happen. If it doesn't happen, more capital is always welcome. Should it happen, I think there is already preparatory capital that's been raised by most of these institutions. The last one I would say is in some ways play for the inorganic. We do know that there are many businesses, many corporates, and certain promoters that are over-leveraged at the corporate level, as well as over-leveraged at the promoter level. We know that this unfortunate pandemic, along with what was already being seen as a relatively low growth phase in Indian economy, is going to make life difficult for over-leveraged companies. And I would like to believe that these companies will have no choice but to sell their businesses. These promoters will be in the market, regardless of what price they get, to sell their businesses. The stronger companies in those sectors, which are able to navigate their path through this process, through this unfortunate pandemic, will have serious opportunities to make up for lost time through these inorganic acquisitions. And I'd like to believe that companies in the chemical segment, we heard about certain companies that have already raised capital, more of them are raising segment, whether it's in chemicals, whether it's in pharma. I would believe many of those would be looking at this new capital as a way and means to augment their growth through inorganic acquisitions.
Okay, let's focus on a couple of the pockets of the market where you are seeing some amount of opportunity shaping up, potential going forward, post the deal flow, but also in terms of growth. Pharma, chemicals, we've already seen an outperformance there, in particular in some of these segments. And you've also described chemicals as being in a sweet spot, similar to pharma back in 2002. Take us through your views, Ashok, on these segments.
So, I'm not a market expert, so I will tell you what my lead analyst tells us in the chemical segment. I think the general belief from our organization is that chemicals is where pharma was, perhaps in 2004, 2005. In that period, there were really two Indian multinationals, Ranbaxy and Cipla, both of who had built their business on the basis of very good science, a lot of investment in product development, and then creating global distribution capabilities. They had built world-class plants that were FDA approved. And if you kind of looked at the pipe of pharma companies at that period, There was, of course, Piramal, which was a large domestic formulations player. There was Lupin that was moving up the chain quite fast. But, that was really the total sum of large pharma companies in India. You didn't hear much about Sun at that time. There was no Glenmark. There was very little one about Serum, although it's an unlisted company. And look at what has happened 15 years hence. On the back of that knowledge, on the back of that investment, on the back of outstanding capabilities in science and product development, Indian pharma companies have gone on to not just, be seen as re-engineering products, but really bringing in original molecules and participating in the true growth of the global economy. I'd like to believe that chemicals industry is perhaps poised at exactly the same level today. For many years, we've been seen as a small part of the larger supply chain, providing intermediaries and both crop science as well as to the pharma industry. I think with the investments made by the Indian industry, with the capability of science and engineering that the Indian industry has, Indian promoter group has, we are looking at exactly the same, kind of hockey stick growth as a possibility in the chemicals industry. The fact that supply chain from China has to be augmented elsewhere, the fact that several multinationals would look at new manufacturing locations adds to that opportunity. But I would believe that the opportunity originally comes from India's set of capability and skills, not just as a relocation from China. The Chinese point, as I said, the Chinese proposition, as I said, only aids and adds to the opportunity today. So we continue to remain very bullish on chemicals, specialty chemicals, companies that are making intermediates for both pharma as well as for the crop science business. And we think that there is a very bright future for those companies and industry.
Where else do you see the opportunity vis-a-vis China? I mean, we were just speaking earlier today with Jonathan Gunn of Morgan Stanley, still saying China has an edge, at least from a market standpoint. Who knows what will happen down the line, but for the moment, where else do you feel we might have the edge, given the kind of commentary and narrative that we continue to see from the government, from the US as well, in terms of rhetoric, particularly given the current tensions with China?
I think we need to recognize one important fact, that China is massive, right? I mean, it's going to be very difficult for the world, even if it desires to completely ignore China, because that will really destroy supply chain for most large companies. So I don't think we are talking here about people abandoning China at this point of time. At the same time, given the developments of last many months, it is obvious that the world is concerned about China, cannot trust China as a supply chain partner for all times to come and at all times. So my own view is that most global companies will want to create a large alternate somewhere. There are obviously many countries that will vie for that. We know that Vietnam, Cambodia, in some ways, is already kind of marching ahead in that direction. But I would think, given the relationships that our government has formed with large global partners, United States, Europe, France, Germany, we should be a natural beneficiary for companies adding a new location for their supply chain, whether it is in industrials, whether it is in auto parts, durable consumer parts, whether it is in chemicals, whether it is in crop science, whether it is in pharma. I would say everywhere where India has superior engineering, science, technology, as compared to many of these other locations. It is important that we recognize that we need to leverage our strength. Somebody else's weakness cannot become a reason for us to gain sustainable growth and scale up. We have to focus on our own strengths, and rather than kind of spread around and try and do everything that everybody else is trying to do, if we focus on 3, 4, 5 areas and say, Here, India has sustainable competitive advantage because we have skilled labor, because we are English speaking, because we have a rule of law. I would argue that we will benefit significantly more, and ability to scale up in those few areas would perhaps be leveraging the opportunity in the most optimum manner at this point of time. Can we compete with China and then Bangladesh and then say Cambodia on the textile segment? We can try. But we do know that many of these countries have FTAs, and that provides a significant advantage to them. If India can negotiate an FTA for supply of apparels and textiles, ready-made manufacturing garments, maybe we can create a competitive position, particularly where there is an element of design, not just mass manufacturing. So again, focus on our strength, focus on our capability, focus on our competitive advantage, and leverage that to create an alternate supply chain to China. I think that's where India will win.
Sure. Where does manufacturing come into the picture, Ashok? And do you think India really has the wherewithal to compete with China when it comes to manufacturing? Or do you think we're going to fall short on scale as well as quality there?
As I repeatedly say, we should not get over obsessed by wanting to replace China. I think the way we need to look at this opportunity is create an alternate supply chain for companies, because people trust us more than they trust China. Global community trusts us. Global business trusts us more than they trust China at this point of time. Therefore, I would argue that if we use that as the fundamental basis, we will be able to create an alternate growth plan. And your question was related to which industry? I'm sorry.
No, I just wanted to know whether at large, when it comes to manufacturing, can we really compete with China? And I got my answer, Ashok. Thank you so much for those views. Good to speak with you, and good to get in, just so many diverse subjects and your thoughts on the same with regards to sectors, markets, economy as such, and we should chat more often.